JB here. Hope everyone's doing outstanding. Friday, April 4th, 8:57 a.m. on this post-tariff announcement day 2. Futures lower this morning. They were actually slightly, well, I wouldn't say slightly in the red, but comparative to yesterday's sell-off, down about a 0.5%, and then close to 1%. And then we had news out that China was announcing 34% tariffs on all U.S. goods, and boom, markets tumbled. The SPY was in the 530s, all the way down to 515.95. Have since bounced 10 points here, so we're at 524 and change on the SPY, and just a remarkable stuff. I mean, you take a look at the VIX, was over 40. That was kind of one of those symbols that kind of gave me hope that the market had priced in kind of like max fear outcomes, right? That was kind of the premise pretty much for the last couple of months, at least for how I looked at things, especially once the 25% tariffs were announced on autos a month ago. Uh, the market had already somewhat got into correction, right? The SPY had dipped into correction for a minute, and my thought process there was that it was kind of priced in the worst case scenarios, right? So then Wednesday comes along, and it all seemed good in that, and I was talking about it yesterday too. All seemed great at the press conference. Reciprocal tariffs 10%, maybe the 25% on autos, and then that chart came out, and it just ever since then, I'm kind of like my mind is blown. So uh yeah, I was saying it yesterday. I hate to use the term like financial Armageddon, but that's kind of what's going to happen if there's no rollback. So now you would think I thought that would be the plan anyway with the tariffs, that there would be some negotiation, and there'd be some outcomes that might be positive for both countries, the U.S. and the country that works out some deals. I still think that's going to happen, but it's got to happen here soon. Otherwise, things are going to escalate, right? So the worry here today, or at least what would be, is trying to get puts at the open, and then there's going to be some headline and the market's going to squeeze. It's going to happen. I don't know if it'll be today or Monday, or it could happen multiple times throughout the day. So it just kind of disappointing here. Now, it's like you normally I read all the stuff, the Wall Street Journal, the headline, the marks, all that stuff, but like reading it now, everybody's reading what's going on, and it's just creating just panic, right? And before it was uncertainty, now it's uncertainty and panic, right? And those that's typically not the ingredients for the market to do well, at least short term. So I mean, it's already come off its highs. I mean, I was talking about that 540 spot in my chart. I wish my annotations weren't that great in the 540. That had given me hope yesterday. We were holding 540 for most of the day until I got on my rant in the afternoon, and sure enough, we broke through that. So that's disappointing. I mean, ideal scenario, we get over 540 into the weekend. There's some kind of headline that at least we're working either with the EU, Vietnam, one of these Southeast Asia countries. A lot of the stuff that comes in, right? We need to work out something to that effect. Otherwise, it's just not going to be good. And then, so I need to say, I'm going to continue to keep things small. I'll be open to doing spec calls and puts. Small becomes big in this type of environment. So I put on the watch list. Don't be surprised I'm aggressive on some lottos here, because a lot of times you get lottos on a Friday, and the S&P moves 1%. I mean, take a look at the futures this morning. I mean, the SPY's moving 1% in a matter of a couple minutes. So with that being said, and being option expiration on a Friday, the premiums are not baking in the extra theta. So we have the day, we have 0 days to expiration of the best days to do some spec lotto. So I'm not just sitting there going to throw out lotto trades. Obviously, there'll be some rationale behind the trade, whether it be some kind of bounce off support or a break of resistance on the put side, whatever it may be. But don't be surprised if I'm a little more aggressive here. But I mean, ideally, we want to see 540. If we can't hold if the market gets down to 515 or 510 or so, I'm going to get some SQQQ crap puts, right? The kind of, well, not puts, calls, excuse me, but the kind of out of the money strikes that if the poop hits the fan, those will be up quite a bit. So that's overall market. Also, just take a look at the COVID, right? So in the midst of COVID, if you were trading in COVID, it's only 5 years ago, almost pretty much to the day. But well, 5 years and 1 month ago. But take a look. This is the SPY chart. Obviously, I mean, we were in the 300s, but 310 all the way down to 210. So you had we hit bear market territory. I remember similar, like now as we start to progress through Wednesday, it's a similar kind of setup, right? With uncertainty and panic. No one knew. All these people were out of jobs, closing locations. Who knew when the economy was going to come back, how it was going to come back, if at all. how we were going to transact. And it did expedite some things, especially on the retail internet side, and Uber and online shopping, and fitness, like all those things got expedited those transformations. But there was still, in the midst of that, there was a heck of a lot of uncertainty and somewhat panic, right? This has the same kind of ingredients. It's just the only difference is that this is like self-induced. It's like someone took a gun and shot themselves in the leg, right? It's a self-induced gunshot wound. It's just like, if this is on purpose, you just hope there's some work, there's some deal made soon. Otherwise, yeah, I mean, he's 360 million people in the United States. I mean, his livelihoods across the country. You take a look at Europe, EU, the DAX down 5%. So it's impacting everybody. All right, so that's kind of the thought plan with the markets today. Also, I always try to look at glimmers of hope, or at least find some silver linings. Yields tumbling, right? So in the midst of what people say is recession, typically yields start to rise in recession, or when the market starts baking in a possibility of recession, and yields are tumbling. And some of it is now because the market's now applying that there's going to be 4 rate cuts here in this year, where only a couple of weeks ago was 2. Sometimes some are saying 3, but some of that may be that premise. But I mean, Fed Chair Powell's been pretty solid on his communication here. So who knows what he's going to say at his meeting. Next Fed meeting is not till the start of May. Also, we had the jobs report out this morning, stronger than expected, right? I mean, people were expecting the private sector jobs to get pummeled, and there was actually a net add on the private sector jobs, right? Jobs created best estimates, although the unemployment rate uptick 4.2 to 4.1. But I mean, all things considered, if there's another silver lining, but gosh, I mean, I'm sure as we progress that data points are going to be even more important as we kind of see the ramifications, right? I mean, what was one piece in the Wall Street Journal this morning was all about people going out panicking to buy goods before the prices go up, right? So I don't know if this is like one of those panics where the weatherman tells you there's going to be a huge snowstorm and everybody goes out and gets the milk and eggs, and then 2 days later it's sunny out, right? I'm an optimist, right? Or I try to be. So I'm a half glass half full kind of person. So I'm hoping there's sunshine in the coming days, and all the milk and eggs are out, and people still buy, can use them. That's my optimist in. But I mean, something's got to work out today or very soon. Otherwise, yeah, probably issues. All right. Oh, and then last but not least is bear flag. So 540 was the first on the SPY. So the next target longer term is 490, and then that might be the resting point if we don't get any deals. And then put in perspective, we were down under 500 a year ago. So we're just erasing the gains from over here, but it's been painful and quick. All right, so that's that overall market. So individual names. I talked about Netflix the last couple of days on the watch list. I was looking at 1,000 strikes. Finally, tried to nibble it on Wednesday. I closed those out for nearly flat. And then yesterday morning, I was looking for some names that might be not as impacted on the tariffs, right? So if you're in the case where you think the tariffs going to destroy the economy, go into recession, obviously selling everything, right? Ad spend from tech names are going to decrease. So in turn, you would look at a name like Netflix, not going to be deriving as many profits from the ad side. I look at kind of on the flip side, like even if unemployment upticks a little bit, we don't hit recession, I think Netflix still does well. They have their content, especially got some reviews over the weekend around one of their shows, but they still have great content coming out. If there's a choice between cutting the cord on some of these other platforms, Peacocks, the Paramount Plus, HBO Max, or the Max, all those names, you would think they're going to cut those first before they cut Netflix. So that's kind of like, hey, here's a name that might bounce even if the market has weakness. Sure enough, the S&P was down 3% for most of the day until the afternoon, until we got over 4%. And Netflix was actually green by the noon hour. So locked somebody calls in for 100%, then 400%. I held the rest. I didn't have many left, and they were actually up like 700%. I almost hit $4. And then I watched it melt for the rest of the afternoon. I held them kind of as a spec lotto. I mean, obviously, I need a big move here for the rest of those calls, but I might revisit here today, depending on what, let's say, like the 930s, maybe the 935s, just if we do get a bounce here. So that's kind of GameStop. Then other names, people, if you had told me crypto would be holding up here in Bitcoin during market turmoil, I would be kind of shocked. And not only that, it's because Bitcoin, it's at 83,000 now. If all things relative, obviously, it's been at this level for a while. But now, I mean, you start looking at, obviously, GameStop is a name that at some point I'll be adding some May strikes. Today might be the day. And then take a look at strategy. And that was holding up, was actually almost near 300 in the pre-market hours until we had the China data, or the China announcement. That could be a name I'm going to get a lot of on. Typically, I've been looking for on the put side, but if you start looking at, maybe it's I wouldn't call it a safe haven asset, but people have been bidding up gold, and gold's up again here today and reversing a lot of losses yesterday. Uh, people might be looking at as maybe somewhat of a store of value hedge. So, if Bitcoin rallies more as kind of that premise, especially into the weekend, could be a nice lot here today. That's kind of what I'm watching. I did get some calls for April 17th, and things look crazy now. If we do get some kind of bounce, some of these names might have some massive moves. So, of course, one of my favorites, Roku, same premise as Netflix. One of those names, I wouldn't call it recession proof, but it's getting sold off. The baby with the bathwater kind of scenario where the impacts of tariffs. Obviously, they're not going to tariff the ad spend for Roku. But the premise, or I guess the reason why it would be down 14, 15% yesterday is because people think that the ad spend is going to go down as a whole because we're entering a recession. So if that's the case, okay, that makes sense. But I'm still not in that camp just yet. So went and got some strikes there. And then Baidu was on a play for China US. I didn't know that. I assumed that, first we had the debt downgrade yesterday for China. So considering BABA was green for some of the day yesterday and Baidu was holding up, I figured that was kind of like a signal that people are more optimistic that the US and China are going to work out a deal. I mean, that possibly could be a headline later today. But have time on those Baidu strikes to hold those. And then SQQQ, if you look at SQQ, maybe 60 strikes now is possibly looking at 50s. You go back, I had the chart. I think this is what it did back in COVID, but it's hard to tell because these 3-time ETFs, they have decay, right? So they rebalance every night and they have decay. It's just, if the market stayed flat for a year and you bought SQQQ, you would lose money. If you bought the other way, the TQQQQ, you lose money. It decays over time, just how it works. But also, I mean, it provides a great instrument for protection, or at least to make money in volatile times like this, because they can go parabolic, especially if you have continuation. So, like I said, 515 or so on the SPY. I'll probably look for one of these. Whether it could be FAS, but FAS hasn't been performing as much as I like. Maybe FAS puts. Well, more likely than not, SQQQ calls. This is the chart. So it's had 5-for-1 splits. I think it's done it 3 times since 2020. So obviously, I mean, it wasn't a $3,500 stock back in 2020. That's because of the reverse splits, but it kind of shows you the move, right? Over a double, even more than that. So you start doing the math and the move here, SQQ, maybe it's over 100. So if you think kind of that pie in the sky situation, we get some crazy the crap move, right? We get the poop move on the markets. That could be a nice hedge. Anyway, folks, let's have a great day. I'll be back on audio later. If things are really crazy, I'll be on at noon hour. Let's have a great day. Rock and roll.